When was the last time you filled up your car with gas? A week ago? A month ago? Judging by the price of oil, it's probably been a while. The last time crude oil was this cheap, Bill Clinton was in the White House. Adjusted for inflation, oil hasn't traded this low since World War II, 75 years ago. That's how major a shock the coronavirus has been on demand. Globally, 92% of all consumers are self-isolating. This means that people aren't shopping, which means goods aren't being sold, which means they aren't being shipped. Trucks, ships, and planes are sitting idly by, not using any gas. While this might be good for the environment, all of these issues mean a complete and utter destruction of demand for oil. This one event, the plummeting price of oil, will most probably be the spark that causes revolutions, wars, and continued economic turmoil for the foreseeable future. Here's why, in brief. Oil traded at $70 a barrel earlier this year and now trades at almost $10. In March, the OPEC Plus countries, those that joined together in deciding how much oil to produce, had a falling out. Specifically, Saudi Arabia argued for cuts in oil production to increase prices, while Russia argued against. In response, Saudi Arabia massively boosted its own production to seemingly punish Russia, causing prices to collapse. Enter the coronavirus, and global demand dried up, causing the perfect storm of oversupply and practically no demand for oil. As prices dropped, buyers of oil began hoarding it, filling up storage facilities so that they could sell later when prices increased. Right now, approximately 90% of global oil storage is full to the brim. What do you do when there's no demand and all your tanks are full? Many producers can't easily shut down their facilities, meaning the oil keeps on pumping and they have nowhere to put it. Producers have begun to pay people to take their oil off their hands. Prices have gone negative in many parts of the world, and there's no end in sight. While this collapse in oil prices was bad for Russia and Saudi Arabia, it was just as bad for the world's largest producer of oil, the United States. Last week, President Trump intervened, convincing Russia and Saudi Arabia to cut production, but oil prices kept falling. Trump's move was meant to save American oil producers whose costs of production are much higher than Russia and Saudi Arabia's. Not only that, U.S. oil producers, especially shale gas producers, have financed their own exploration using low U.S. interest rates. During the last recession, many were in trouble and had to turn to debt markets. Now tens of billions of dollars worth of bonds that finance fracking operations have been downgraded to junk. Here's why this is critical for you. Many U.S. funds are heavily invested in these junk bonds. You may already be invested in these bonds yourself through your 401k or other retirement savings. A collapse in this sector may trigger a contagion effect, just as the mortgage-backed securities collapse took the entire economy down with it in 2008. This time, however, the entire world is in lockdown, and economies are on the brink of collapse as it is. So what's going to happen? If oil prices stay at these levels, and there's no reason to believe they won't, oil-producing companies and countries will begin to default on their obligations. Many already have. This will force the sale of other securities as investors scramble for cash, and this will depress prices universally. Countries that rely on oil revenue won't be able to provide basic governmental services to its people, and the people will begin to protest. Protests will spawn more protests until leaders are pushed out and revolutions take place. Those with military might may use this as an opportunity to destabilize other countries and take over. What can be done? The Fed has already begun to prop up junk bonds and will likely continue to do so. It's already spent more money in the last 6 weeks than it did in the previous 16 years. The Fed and other central banks will continue to pour more money into markets, but at some point, the impact of their investments will also wear thin. What then? That's really anyone's guess. We're in uncharted territory now. The only thing we know for sure is the longer economies continue to be shut down, the longer the recovery will take.